Ladies and gentlemen, there's some good news for Singapore and Malaysia economy, and we're all intertwined together. And I think it's very important for us to analyze this news and position ourselves to catch this upswing. Let's watch on, shall we? Well, Singapore and Malaysia are two regional powerhouses and both are rising. That's despite the entire global volatility and geopolitical tension. These two Southeast Asia neighbors are actually able to demonstrate a lot of resilience. So let's watch on and see what these resilience are. There are a couple of good news that have come out. Number one is that the US have just issued a tariff reprieve for the 100% pharmaceutical tariff for Singapore. And Singapore being a major pharmaceutical export country, this actually spells a lot of good news for us. Our GDP for Singapore has surged about 2.9% for Q3, beating forecasts. And by the way, Malaysia GDP is also now poised to grow at 4.5%. That's amazing, right? And both countries' currency are stable. In fact, the ringgit is set to rise pretty strongly. Year to date, it has risen by 5.8%. And right now, there's about $5.5 billion commitment into Johor Special Economic Zone. And I think this one is a very good news for both Singapore and Malaysia. Going to the details, US has postponed 100% of the branded drug tariff on Singapore. And this provides us some breathing space. Hopefully, we can further negotiate this down. And right now, our pharmaceutical exports to US stands at $4 billion, which is about 13% of our total Singapore export for pharmaceutical. So right now, many firms are actively engaging exemption through the US Trade Office. Long-term supply reliability is being reinforced. So this is actually a very good sign. Now, I just got wind through some trade negotiators globally that it is possible, depending who you know, to negotiate some of these tariffs down. And I think this is not a question of what you know, but who you know. So I'm sure a lot of string pulling, a lot of negotiation happening behind the scene, and give special credit to the negotiators from Singtel to be able to achieve this. Currently, right now, our Singapore GDP, we now going at a 2.9% annual growth, and that's very strong. Initially, we are all predicting that, you might even go to recession and so on. Well, the whole year's GDP is doing strong, and that's above market expectation of 2.0%. And financial services and construction services and digital services are the one that drive it. I think right now for Q3 is 2.9%. The full year they're estimating 3 to 3.5%. That's very good news for a developed country like ours. And right now, the inflation, especially a core inflation rate, looks very subdued. We are looking at 0.5% for the whole year, and that's very low. So the flat trajectory for the core inflation is something that we are all very happy about. And as a result, MAS maintains unchanged the currency policy. And what we want is a stable and strong Singapore dollar. A strong Singapore dollar will ensure that imports will come in at an affordable price, and our exports are not too expensive. So that counterbalance is important, and I think we kind of achieved it. Interestingly, our US dollar remains strong because we are kind of like positioned like a regional safe haven. So our MAS really built a lot of credibility for our Singapore. And the other one is our current account is having a surplus. So a lot of inflow of currency plus trade surplus. I think we are all doing good on this front. A quick talk about the Singapore Johor Special Economic Zone. The cross-border growth engine is growing phenomenally. Right now, they managed to achieve $5.5 billion in investment commitment. 20 Singapore firms are joining this initiative. This includes semiconductors, logistics, green energy, whatsoever. It's expected to create about 20,000 jobs, largely in Malaysia, within 5 years, and they are fast-tracking a lot of approval and tax incentives. Now, of course, this will benefit Johor a lot And this will also benefit Singapore companies because we can offload some of the expensive production overseas. I think this is all good. And I think this is a nice segue to talk about Malaysia. Malaysia is doing well. The GDP last year did about 4.7%, and this year is estimated to grow at 4.5%. That's despite all these tariff headwinds and things like that. That's quite amazing. And largely because there is a very strong domestic consumption. I also think that good leadership of Prime Minister Anwar Ibrahim has suddenly led Malaysia to do well in the fiscal management. There's a lot of fiscal prudence right now and fiscal expansion, and trade is doing well. So Malaysia is doing so well that the ringgit is showing a lot of strength. So the ringgit appreciation is phenomenal. It has appreciated by almost 6%, 5.8% versus the US dollar. Even Singapore versus the Singapore dollar, which is a very strong currency, the ringgit has strengthened phenomenally to right now about 3.25%. When I bought my house, okay, the ringgit was about 3.45%. I was still jumping up and down. I did not catch exactly at 3.5. And now it's 3.25 and set to go lower. Analysts are expecting the ringgit to hit US 4 is to 1. That means that $4 US to 1. Okay. And if that were to happen, the Singapore dollar versus the ringgit will be below $3. Okay. About 2.95 to be precise. And there is a further projection of strengthening of the Malaysian ringgit. As that's good sign for Malaysia. That's not too good a sign for Singapore shoppers buying of properties in Malaysia. For those that already have a property, good for you. Okay, for those who are buying or renting whatsoever, shopping, that's not too good. So the official outlook is that the ringgit will break the 4 ringgit is to 1 US dollar, and which means that it will also break the 3 ringgit to 1 Sing dollar barrier. So the second finance minister said that the ringgit may strengthen to more than 5% within 12 months, making it the strongest level. And that's largely because there's a lot of fiscal prudence right now and subsidy rationalization. Now, which basically means that the government is cutting down on subsidy. I fear that the Malaysian population may not see this in a good way and vote the government out and things like that. But let's assuming Prime Minister Anwar has his way of managing the sentiment of the population, then this one will be good. Now, let's not also forget that there's a surge of foreign direct investment into the country. I actually think that Malaysia economy is poised to grow phenomenally and good days are ahead. I just hope that the population can take the hit right now from the prices, and it's not a trivial matter. So I think that Malaysia is set to grow well in the long term if the current government can continue to win the trust of the people. So if that is true, then there will be fiscal prudence, and they are targeting to hit 3.5% deficit, which is actually a good number. And there is a lot of transition of the industry as well. So let's see. Okay, let's see. Let's hope that Malaysia will do well. So, what does this all mean for all of us as investors? Number one is that if the economy is going to do well, okay, and I hope that will flow down to everybody, then it's time to build up our dry powder, okay? I always encourage everybody when the business is doing well, the economy is doing well, your bonuses are doing well, and so on, build up your dry powder in a hope that one day, there'll be a chance for you to fire and do some bottom fishing in a big way. And in the meantime, as the economy continue to rise, we also see assets continue to rise as well. In particular, stock market and things like that. I think this is where we must diversify and rebalance. I talk about that many, many times. Okay, and this is something that I think is important. And we should try to capture a lot of the growth industries by being part of it or investing in it or doing business in this, right? So there's green energy, digital sectors, artificial intelligence, and so on. And we must also watch some of the global signal, especially on the Federal Reserve, which is poised to cut interest rate, hopefully end of this month as well. Let's watch and follow all this. Remember, this is a time for us to prepare not to chase some of this bull run. A lot of people say that gold prices have gone up phenomenally, so they want to start buying right now. I don't understand the logic of buying things when they are already on the high. So in closing, I think that Singapore and Malaysia are right now riding a very positive wave in their economy. And I hope that this is a time where we will exercise a lot of opportunistic wisdom, build reserve, catch this opportunity, and so that we are all right along this powerful wave. Let's watch on, shall we, and see how things would materialize. But anyway, thank you for watching, and I'll see you in a day or two. Bye bye.